Hello, everyone, and thank you for joining us today for Financial Management for Program Directors. If you haven't had a chance, feel free to answer the question on your screen of what is the biggest challenge in relation to financial management. Before we get started, let me take a few minutes to go over some basic webinar logistics that can help ensure our time is well spent. Many of you have seen these, many of you have been on all of these webinars, but just in case there's some new people on this webinar, let's just do a quick review. First, you are muted upon entry, so we can eliminate any background noise. When we open the webinar to questions, you can raise your hand. And I know we have one hand raised right now, so if you have a question with your hand raised, if you'll just type it in the chat box. There'll also be distinct times during the webinar and at the end where we will allow for questions. If there's questions you have that pop up while we are presenting, please do not hesitate to put them in the chat box, and we'll respond to them when we get to breaks or incorporate our response into what we're talking about at the time. Also, if you want to make a comment or ask to respond non-verbally, please click the chat box at the top right-hand side of your screen to send your message. So to make sure you're comfortable with the chat interaction we'll use throughout this webinar and our last webinar next week, here's a screenshot of what you see right now. If you cannot see the chat box like the one you see here, just click on the chat plus sign and then you'll see the white space appear underneath. Then you'll notice there's an option to who you can send the chat to. Please make sure you send your chat to all and then press send. If you do not want others to see your question for whatever reason, you can also hit the drop-down box and select the presenter as the only person you want to see the question or comment. So welcome to Webinar 9, Financial Management for Program Directors. As you are aware, this webinar is the 9th of a 10-part series of webinars for new AmeriCorps program staff and new AmeriCorps programs. Our last webinar of the series will be next Monday. So my name is Jennifer Cowart, and I will be leading today's webinar. Amy Salinas will also be joining us to assist with any questions that occurred during the webinar. So after our time today, we hope that you'll be able to understand the technical compliance components of your AmeriCorps budget, work with key fiscal staff at your organization using fiscal terminology, enhance and improve upon current financial practices, and assist fiscal staff in timely and compliant fiscal grants management. Some of the items that you all said were challenging to you at the moment, so hopefully we can give you some tips and hints to help you navigate all of those items. So to support those outcomes, we're going to discuss the following today: budget functions, budget basics, policies, procedures, preparation, budget types, and we'll end with financial reporting. So before we begin talking about the nuts and bolts of the AmeriCorps budget, we're going to spend a few minutes talking about how a budget should function and what makes an effective budget. An AmeriCorps program budget becomes a part of your contractual obligation to your State Service Commission and to CNCS. It also serves as a blueprint for your grant activities, your program goals, and objectives. It helps to ensure compliance to your grant terms and conditions and any regulatory restrictions. It also serves as a tool to monitor and compare progress against the original program plan and budget to actual expenses. For a budget to be effective, it has to be these three things: realistic, consistent, and flexible. When we look at a realistic budget, it's one that reflects expected program revenues and expenses. So it understands the strengths and weaknesses of your organization and its capacity to carry out program activities. For consistent, it has to be consistent and aligned with organizational goals and objectives. And given the limited amount of resources for most organizations, each dollar the organization spends must impact specific program and organizational outcomes. And lastly, it must also be flexible. An organization's financial and operating circumstances can often change, and most organizations must have a budget that can absorb lower than expected revenue and higher than expected program costs. Think of budgeting as just not an annual process, but an ongoing review of activities and actual cost monitoring as well. This way, shortfalls or unexpected costs can be addressed proactively. In addition, a good budget design should establish a realistic scope. So costs that are realistic and reasonable based on the proposed program design. And you have to ensure that you've covered the details. So you have to think through all aspects of your program to ensure that all potential costs are outlined in the budget. It also has to be a highly competitive proposal, which should include the lowest possible cost per member service year to allow your program to function well. It also must comply with requirements and have a solid guide for program execution. So to create an effective budget, you should take the following steps. First, you need to determine the need of your community or communities that you serve. You set up your program goals and objectives. Decide a strategy to accomplish those goals. Translate that strategy to dollars. Then you prepare your budget. You set up your budget control processes. You compare budgeted to actual expenses. And lastly, you modify your budget as necessary and allowable by the funder. Now, we also need to review some budget basics in relation to federal funding and specifically AmeriCorps. We discussed this diagram in our very first webinar a couple months ago, Understanding the Rules and Regulations. Each layer of this diagram represents the different layers of rules and regulations that govern your AmeriCorps funds and must be followed in order to stay compliant. One of the most important layers when it comes to your budget is the Office of Management and Budget, or OMB, cost principles, which are encompassed in the OMB Super Circular, which is now located in the Code of Federal Regulations in 2 CFR. As you know, AmeriCorps programs are funded by federal dollars and therefore are subject to the OMB cost principles. And the OMB cost principles designate the allowable costs under grants. They're designed so that federal awards support their fair share of the cost. They provide information about factors that affect allowability. They provide information about reasonable, necessary, and allocable costs. They provide information on documentation requirements, and they encourage consistent treatment of costs. As I just said, the OMB cost principles are found in the Code of Federal Regulations under 2 CFR 200, and you can access them at that link on your screen. So once you've read and become familiar with the documents, rules, and regulations that guide AmeriCorps programs, it's now important that you understand some general terms. The first one being cost type, and the second being allowability. Let's first talk about cost types, for which there are 2 different types. The first one is the most familiar, and these are direct costs, which can be defined as costs that are directly attributable to meeting the goals and objectives of your program. So examples of direct costs include allowable direct charges for AmeriCorps members, such as living allowance, health care, FICA, staff who train, recruit, or supervise AmeriCorps members, member service gear and special equipment, independent program evaluation, and member and staff travel. The second type of costs that are indirect or administrative costs, which are defined as general, centralized, or overall administration expenses of an organization. And these are the harder ones to grasp, and a lot of people struggle with these. But examples of indirect or administrative costs include accounting, auditing, general legal services. So it's harder to attribute these costs directly to the AmeriCorps program. For instance, if your agency has 500 staff members, for them, the accounting office to run payroll for your 50 AmeriCorps members, it's hard for them to calculate the exact time and effort for that. So you can utilize some of your administrative costs to help offset that. Other things that can be counted as indirect or administrative costs are internal evaluation, general liability insurance, and then again, salaries and benefits related to general organizational management and support, usually accounting and human resources. There is no documentation required for these costs for CNCS purposes. Within both of these cost types, there exist costs that are both allowable and unallowable. So as in any federal program, there are unallowable costs, and these unallowable costs are outlined more completely in the OMB cost principles, but here are a few of them. Lobbying, fines and penalties, expenses not necessary to meet program objectives, entertainment and alcohol, costs that would constitute waste, fraud, and abuse, unreasonable costs from a prudent person perspective, and costs with no logical basis for allocating to your program. On the opposite end, to be allowable under a grant, costs must be reasonable and allocable for the performance of the award, conform to the grant award limitations and the OMB cost principles, be consistent with policies and procedures that apply to both federally financed and other activities of your organization, be given consistent treatment within the entire organization, being in accordance with the generally accepted accounting principles or GAAP, not to be included as a cost or used to meet cost sharing or matching requirements of any other federally financed program. That was really important. So you cannot use AmeriCorps dollars as match on any other federal program. There are some federal programs that you can use as match on your AmeriCorps grant with approval from that federal agency, and we'll talk more about match later in the webinar. And lastly, they have to be adequately documented. So now that we've looked at how a budget should function and some budget basics, let's review some policies and procedures that your program or agency needs in relation to financial management. In all aspects of your AmeriCorps program, there should be internal control. And internal controls are just organizational policies, procedures, processes, and systems. There's a clear identification and appropriate separation of authorities, responsibilities, and duties. So the same individual that's opening the mail is not signing the checks and depositing them and reconciling the bank statement, but there's some separation of duties for those checks and balances, which is the last item here under internal controls. Since AmeriCorps is unique in many ways, the requirements and the rules around it, the program may not easily fit into your established agency's internal controls. So these rules and requirements may also be very confusing to other departments in your agency, such as your HR department or accounting department. So it's important that the internal controls bridge the gap between the agency and the AmeriCorps program, which might mean some modification of the agency's internal controls to do so. So written policies and procedures are part of those internal controls to provide that operational framework for the program and your organization. A well-written and comprehensive set of policies and procedures can help your organization run more efficiently and effectively while also ensuring compliance. While all the policies and procedures identified are not required, they will assist your organization in developing an internal control system that will help ensure that assets are safeguarded and operations are conducted in accordance with generally accepted accounting principles. So the need for and the level and extent of policies and procedures can really vary considerably from organization to organization. And some factors that influence that variance include statutory guidelines and restrictions, the size and type of the organization, the number of funding sources, the complexity of reporting requirements, the size of staff, and the number of locations and transactions that occur within the agency. Some policies and procedures are necessitated by congressional appropriation language or the federal regulations in regards to CNCF. The OMB circulars, which again are in this Code of Federal Regulations or CFRs, also require that certain administrative requirements or controls be in place. This slide shows some of the areas for which written policies should be in place and specific aspects that should be addressed. For example, if we look at the payroll compensation column, there should be written policies and procedures around the following aspects: time and attendance process, expectations and reconciliation, payroll deductions, administrative processing, paycheck distribution, reconciliation of payroll documents to general ledger, and consultants. And this is where you may need to bridge those internal controls, because members receive a living allowance, so their payroll calculations and distribution may be different than the overall agencies. And then finally, each organization should have written policies and procedures, including any needed forms and documents for the following situations or circumstances. So organizational chart, job descriptions, voucher check requests, purchase orders, travel reimbursement, travel policies and procedures, which include things as pre-approval, advances, use of federal per diem rates or the agency rate, list of board members, committees, frequency of meetings and meeting minutes, organizational documents such as the IRS determination letter and articles of incorporation, any conflict of interest policy for the board, management, and staff, subcontracts and cooperative agreements, and lastly, records, equipment, property management, and disposition. And then finally, your program also needs to establish procedures to store, secure, and maintain records for the required period of time. These procedures must ensure that records can be obtained and presented for review during monitoring or an audit. As noted in the AmeriCorps state and national policy FAQs, programs must retain all grant records, including fiscal and supporting documents, for a minimum of 3 years after the submission of the Commission final aggregate AmeriCorps financial report for commissions, which is CNCS's grant, under which they are funded. So you are a subgrantee of a state commission. As such, you have to maintain your records for a minimum of 3 years after the commission closes out their grant with CNCS, or for any greater retention period specified in the terms and conditions, the notice of grant award, or its attachments. So it's important that you understand that and talk to your state commission about when your records can be destroyed. It's not 3 years after you close out the grant, it's 3 years after the commission closes out their grant with CNCS. It's important to note that if there's an ongoing audit, investigation, or other monitoring activity actively taking place, the records for the year in question cannot be disposed of until the audit, investigation, or monitoring has officially concluded. It's also suggested that programs keep their member records for a minimum of 7 years, because that's how long members have to utilize their education award in the event that there's anything that comes up and any issue with their education award within that time period. So let's now talk about some steps you should take to prepare your budget. First, we're going to do a quick poll. So let me launch this quick poll of who developed the AmeriCorps budget for your program. You can select more than one answer for this poll. So is it your program director, the financial staff, agency executive staff, or all of the above, or other? And again, you can select more than one in the poll. I'll leave it open for a few more seconds. People are still voting. Okay. So it's a little bit all over the place. 31% of you say the program director does. 14% say financial staff. And remember that we allowed multiple selections. 31% agency executive staff, and 45% all of the above. I like all of the above because the more individuals involved within the agency in developing the budget, usually it's a stronger budget. And 7% of you said other. So thank you for taking the time to answer the poll. All right. So once you determine the needs of your identified community or communities, and establish your program goals and objectives like we talked about earlier, and finalize the strategy to meet those goals, you're ready to prepare the budget. So to do this, you will need to estimate the resources needed to achieve the program goals you've set, including but not limited to the number and type of AmeriCorps members, the number of percentage of time of staff dedicated to support the programmatic, fiscal, and administrative responsibilities, the materials and curriculum, the space, utilities, supplies, and telephone, medical and liability insurance, member service gear, training costs, and member and staff travel. It's important when estimating costs that you also consider any ongoing specific costs, any ongoing shared costs, like space may be a shared cost, and then any program startup costs if you're a new program. We'll go into more depth on each of these categories in a little bit in the webinar, further down in the webinar. So along with estimating the resources you'll need to make this program successful, you also must read carefully the request for applications, the notice of funding opportunity, the application instructions, and other guidance provided by the Corporation for National Community Service and your state commission. You have to organize the grant narrative to ensure it matches with the budget expenses on the budget form. The last couple of years, there has been no specific written narrative for the budget section, so it's really important that you have a very strong budget. And then any other sections of the grant narrative that refer to the budget or have an impact on the budget should all be aligned with the budget. And then you have to consider the amount of funds needed from the Corporation for National and Community Service. You also need to consider, and for that one, programs should pay special attention to the amount of federal funding they request per full-time AmeriCorps member, known as the cost per MSY, which we'll discuss later in the webinar. And then lastly, you need to consider the amount of funds and in-kind support you'll need to bring in as match and what sources you will get that much from. You also have to provide adequate descriptions and calculations to support each line item and allocate costs based on a consistent and documented cost allocation plan. For example, the level of effort should be a percentage of the time spent on AmeriCorps times the salary. For rent, you would take the total AmeriCorps program space divided by the total agency space. And lastly, for expenses, the percent of expenses for the program versus your total organization or agency's expenses. The next term we're going to talk about is years, and the AmeriCorps state grant has two main periods of time. The first period of time is the budget year, which is this 12-month period of time. To operate a program, it requires that you have funding for a full 12 months to help with staffing, program costs, etc. And your budget year is outlined in your grant application. The second period of time is the program year, which consists of the time frame in which your AmeriCorps members serve their term. So organizations design their program with AmeriCorps member terms of service that fall somewhere within the 12-month budget year. It's generally recommended that programs do not have members serve for a full 12 months to allow program staff time to recruit the next corps, evaluate the current program year, and prepare for the upcoming program year. In the AmeriCorps 101 webinar, I also shared a benchmark calculator, which is a great tool to determine the best program year period for your members. It's also important to note that members cannot serve more than 12 months unless they were suspended during their term of service. So now let's look at the various AmeriCorps budget types. But before we jump into those, I just want to make sure everyone is on the same page with terminology. So in prior webinars, we discussed the term member service year, often referred to as MSY, which is a basic equation where one MSY is equal to one full-time equivalent member. So each member's service term has been assigned a title, minimum hour requirement, and an MSY value by the Corporation for National and Community Service, and they're as follows. So full-time members have an MSY value of 1, and they have to do 1,700 hours. Three-quarter time, 0.7 for 1,200 hours. Half-time, 0.5 for 900 hours. Reduced half-time is 0.380954, and they have 675 hours. And then one of my favorites, which shows our government's really good at math, because I don't understand how they came up with quarter time, but quarter time is 0.2645527 for 450 hours, and then our last one is minimum time at 0.211640022 for 300 hours. So in your budget, regardless of what budget and program type, there is a maximum cost per MSY that you can request. The maximum cost per MSY is set each year in the Notice of Funding Opportunity, and this is a strict maximum, and if you submit a budget over the maximum, there is a chance you will not be considered for funding. It's also important to note it can be to your advantage to request a lower cost per MSY than the maximum, but also keep in mind that over time you are expected to request this lower cost per MSY. The maximum cost per MSY for each grant type are as follows, and it's important to note these are for the 2019-2020 program year. Most of you have already submitted your grant for that program year. Some of you are just submitting your continuations this month or next month. But for 1920, cost reimbursement, maximum cost per MSY is $15,192. They changed it, so full-time fixed amount is the same as the cost reimbursement at $15,192. Education award program at $800 and professional core at $1,000. Cost reimbursement programs operating in rural communities as defined in the CNCS mandatory supplemental guidance and programs that recruit youth, opportunity youth as AmeriCorps members may request up to $15,360 per MSY. And the MSY calculation is found out by just taking the total CNCS dollars divided by the total MSY. So there are three main budget types available through AmeriCorps, and those are cost reimbursement, full-time fixed amount, and education award program. The first budget type and most common is cost reimbursement. Through a cost reimbursement budget, the funds are utilized to pay for program costs such as member support, operational costs, and administrative costs. This budget type is available to programs whose design may include a mix of full-time and less than full-time members. A cost reimbursement budget requires a full and detailed budget that outlines CNCS and grantee funds. Through the grantee funds, programs must meet the CNCS requirements for providing financial match, which we will discuss later. This budget type allows the flexibility to use all of the funds for allowable costs, regardless of whether your program recruits and retains all of their AmeriCorps members. Again, this is the most common budget type. The second budget type is full-time fixed amount. And these funds are paid out based solely on AmeriCorps member enrollment and retention. And this budget type differs from a cost reimbursement budget in the fact that it is not managed or reported by on-line items. For a full-time fixed amount budget, the program design must be for full-time members or less than full-time members serving in a full-time capacity. While there are not specific matching requirements, the maximum awarded amount per member is less than what is required to fully support a member, so organizations must still raise the additional funds needed to administer the program. Full-time fixed amount budgets also have reduced financial reporting requirements, and this budget type is available for previously funded and recompeting applicants only. The last main budget type is the Education Award Program, or EAP. And these funds are paid out based on AmeriCorps member enrollment strictly. The EAP budget provides a small fixed amount of funding to programs, and the program design can include a mix of full-time and less than full-time members. This budget type is similar to a full-time fixed amount budget in the fact that it is not managed or reported by line item budget. There are also no matching requirements, but programs selecting an Education Award Program budget are responsible for utilizing their own or other non-CNCS resources for the majority of member and program costs. This budget type also has reduced financial tracking responsibilities. AmeriCorps State Education Award fixed amount programs are viewed very favorably at the state and federal level in terms of cost efficiency. Okay, so we're going to do one more quick poll, and then we're going to go into questions. But what type of budget does your program operate? Is it cost reimbursement, full-time fixed amount, or education award program? If you'll just take a second to answer the poll. Okay, so it looks like the majority, as we said, it was the most common. 84% of you are on cost reimbursement budget. We have 8% on full-time fixed amount, and 8% of you have an education award program. Great. Thank you for sharing. All right, so we've talked about a lot of information. Before we go any further, I just want to pause to see if there's any questions. So if you have a question, please feel free to type it in the chat box now, and I'll give you a few seconds to do that. Okay, so we've had one question come up from Rebecca. And Rebecca's question is, I may need some clarification on this, Rebecca. If we are a subgrantee from a state grant, can we switch from cost reimbursement or to one of the other budget types? So when you say subgrantee of a state grant, does that mean you've applied, your agency's applied for the grant from the state commission, or you are a subgrantee of a program that has received a grant from the state commission? Give you a second to respond, or I can. Okay, so if you are a subgrantee of the State Commission, your program, you decide the program model and the budget type. Like I said, full-time fixed amount grants are only available to programs that are recompeting. And I always say if you're doing a major program change, like adding a ton of members or looking at switching budget type, have that conversation with your commission. They can tell you the pros and cons. They know your program well. So you can switch from a cost reimbursement grant to a full-time fixed amount. You may, depending upon your commission, you may not be able to do it during a continuation because that changes some funding parameters, but certainly in a recompete, that's something you may want to look at and discuss. And again, talk to your commission. But you select the budget type, and we'll talk a little bit more kind of about the pros and cons of each of those in a few minutes also. All right, any other questions? All right, so let's continue on. And we're gonna actually, so we provided you with some foundation information about the AmeriCorps budget and financial information, but we're gonna spend some time now talking about the specific AmeriCorps budget sections. What we will review now, excuse me, are the required budget sections for a cost reimbursement budget. And I had 8% of you say you have full-time fixed amount budgets, and 8% of you say you have education award program budgets. So even though that we're reviewing the cost reimbursement budget and the fixed amount education award budget type, we'll touch on later because they're more streamlined and the information required to submit is really considerably less. But it's important to note that all the areas that we review now for cost reimbursement budget are important for fixed amount and education award budgets to understand and consider so you know how to prepare for all the costs that are needed and required to make your program run. The cost reimbursement budget consists of, it's completed as part of your grant application in the budget section of eGrants, and it's comprised of 4 main sections: the program operating costs, the member costs, administrative indirect costs, and source of match funds. Please note that we'll be reviewing the general costs under each section and that state commissions may require additional items that are not noted here. It's also important to note that all of these categories, again, are based on the 1920 application requirements. So let's talk about the first section, program operating costs. And this is broken up into 9 subsections, sections A through I. We're going to talk about each of these in more detail. The first subsection, section A, is personnel expenses. So as you develop this section of your budget, there are a few important things you need to know. This subsection only includes staff that are directly charged to the grant and can be organization staff and or host site staff. Each staff person must be listed separately, and you have to include their salary and percentage of effort as a percentage of their full-time equivalent devoted to the AmeriCorps program. Each individual listed in this section is required to complete a timesheet allocating out the actual time spent on AmeriCorps duties and other projects assigned to them as defined by your organization type requirements in the Code of Federal Regulations. And then all personnel in this section are required to have the elements of the National Service Criminal History Check conducted. The second subsection, section B, is personnel fringe benefits. For each of the staff you listed in the previous subsection, you have the ability to include fringe benefits. So allowable costs include FICA, workers' compensation, retirement, unemployment insurance, health and life insurance, IRA, and 401k. Holidays, leave, and other vacation benefits are not included in the fringe benefit rate. A few things to note: that you need to list the types of fringe benefits and the cost of each benefit for each staff position, or you can provide a calculation for total benefits as a percentage of the salaries to which they apply. If a fringe benefit amount is greater than 30%, then they must be listed separately and justified. The third subsection, section C, is staff and member travel. In this section, you need to consider staff mileage to visit member sites, staff conference travel, member mileage for special events, long distance travel for member training, member conference travel, etc. According to the CNCS application instructions, applicants are expected to budget for staff travel to attend CNCS-sponsored technical assistance meetings, such as the National Service Training Conferences. For all travel you put in this section, you need to describe the purpose of the travel, along with a calculation that includes itemized costs for airfare, transportation, lodging, per diem, and other travel-related expenses. For mileage and per diem, you can utilize the current GSA, or General Services Administration, reimbursement rate. Unless your organization's policy is different, then these costs should be treated consistently under your organization's policy. The fourth subsection, section D, is equipment. Equipment is defined as tangible, non-expendable personal property that has a useful life of more than 1 year and costs at least $5,000 per unit. Equipment purchases are limited to 10% of the total CNCS funds requested. I've rarely seen programs with line items, with items budgeted in this line item. For the most part, if a program has something budgeted here, it is usually a conservation corps that needs vans and trucks to transport their members and their tools. Not to say that other programs can't have items listed here, just that's not a very common utilized line item. The fifth subsection, section E, is supplies. The supplies section includes consumable supplies and materials, including equipment that does not fit the previous definition of equipment. You are required to budget for AmeriCorps member service gear, such as AmeriCorps branded polos or t-shirts, lanyards, name tags with the AmeriCorps logo, or you have to describe how you will provide members with service gear without using grant funds. For more examples or ideas of member service gear, you can visit the CNCS National Service Gear store or gooddeed.org. I don't get any kickbacks from either of those, as they're usually just the largest vendors. You also have the option to utilize local vendors, but again, you just have to have the AmeriCorps logo on it. And members must wear the AmeriCorps logo on a daily basis, and CNCS prefers it through clothing. Single items costing $1,000 or more must be individually listed. The sixth subsection, section F, is contractual and consultant services. And this subsection would be utilized for consultant costs related to the program's operations, except for training or evaluation consultants, which would be listed under subsection G or H, respectively. Examples of costs outlined in this subsection can include operational program coaching support to assist in the development of forms, systems, and processes in your program startup. And applicants must list a daily rate for any contractors, but there is no maximum daily rate. The seventh subsection, section G, is staff and member training. Staff training costs are costs associated with training staff on program requirements and training to enhance the skills staff need for effective program implementation, such as program or financial management, team building, etc. Member training costs are costs associated with member training to support them in carrying out their service activities. Training registration fees would also be listed in this category and not member and staff travel. The eighth subsection, section H, is evaluation. And the costs included here do not include the daily or weekly gathering of data to assess progress towards meeting performance measures, but is a larger assessment of program impact, as well as an assessment of the overall systems and program design. Excuse me, and the amount you include will depend on how long you've had an AmeriCorps program and if you are required to have an internal or external evaluation for which more guidance would be located in the Notice of Funding Opportunities. The ninth subsection, Section I, is Other Program Operating Costs and can include the following costs. You are required to budget in this section for criminal history check costs for staff and members who receive a salary, education award, living allowance, or stipend, or similar payments from the grant. Programs are expected to budget $54 plus the cost of state checks for all covered positions. You may want to include here office space rental for programs operating without an approved indirect cost rate agreement that covers office space, timesheet software, utilities, telephone, internet, and similar expenses that are specifically used for AmeriCorps members and AmeriCorps program staff and are not part of the organization's indirect cost allocation pool. Other items, if office space, utilities, telephone, internet, and similar expenses are budgeted and they are shared with other programs or activities, the cost must be equitably prorated and allocated between those activities or projects. And the last one you can include in this section is recognition costs for members. Please note that gifts and/or food in an entertainment or event setting are not allowable costs. And this is a very tricky line item, so I always encourage programs to discuss these specific recognition costs with their state commission. All right, before we move on to our next section of member costs, there's one question that's popped up, is how often do staff need to have an NSCHC done? And staff are the same as members if there's not been a gap of more than 120 days in service. So if that staff member has not quit the agency and then come back, and the gap is longer than 120 days, then you don't need to rerun those checks. So you could have a staff member that started 3 years ago, and for CNCS purposes, if there's not been a gap in service, that check does not need to be rerun. Sometimes for agency purposes, it may be good to do due diligence and check on that individual again. All right, so let's move into member costs. This is the second section of your budget, and it's broken into two subsections. Sections A and B. Living allowance and member support costs. So the first subsection, Section A, is living allowance. And it is in this subsection that you will indicate the number of members you are requesting and whether your request is for members with a living allowance or without a living allowance. This chart indicates the minimum and maximum total living allowances for each member term for the 2019-2020 program year. The only term with a minimum living allowance is a full-time member at $13,992. The maximum living allowance amounts are as follows. Full-time members is $27,984. Three-quarter time is $19,753. Half-time members is $14,815. Reduced half-time is $11,111. Quarter time is $7,408. And minimum time is $4,938. Please note that programs with a professional core program are not required to adhere to the maximum living allowance amount. Education award programs are also not required to provide a living allowance, but if a living allowance is provided, it must comply with the maximum requirements we just discussed. The second subsection, Section B, is member support costs. And this section includes FICA, workers' compensation or accidental death and dismemberment, healthcare, and other member support costs. Member support costs do not include the education award or child care benefit, as those are directly provided by CNCS. Federal unemployment compensation law does not require coverage for members because no employer-employee relationship exists. So the grantee may not charge the cost of unemployment insurance taxes for members to the grant unless mandated by state law. And there's very few state laws that do mandate unemployment for AmeriCorps members. So it's important, as we talked about in the rules and regulations webinar, for you to understand your state law. And if you have a question about unemployment, to talk to your state commission. Programs should also budget for workers' compensation or accidental death and dismemberment in this section. So let's now talk about the third section of your budget, administrative or indirect costs. We've talked about these costs, but let's briefly discuss them again. As we stated earlier, administrative costs are general or centralized expenses of the overall administration. They do not include particular program costs. CNCS allows applicants to request federal funding to cover administrative costs up to a fixed percentage without a federally approved indirect cost rate and without documentation supporting the allocation. No matter whether the fixed percentage or another indirect cost rate is used, most state commissions will retain a portion of the overall administrative cost of the grant for use in managing the grants and supporting their programs. And there are 3 different methods to calculate allowable administrative or indirect costs for which your program will select one. The first one is the CNCS fixed percentage rate method, or the federally approved indirect cost rate method, or a de minimis method. So the first method and the most commonly utilized is the CNCS fixed percentage. And this rate allows you to charge administrative costs up to a cap without a federally approved indirect cost rate and without documentation supporting the allocation. The CNCS share maximum amount is 5%, and the grantee share maximum amount is 10%. The second method must be utilized if you have a federally approved indirect cost rate. The rate will constitute documentation of your administrative costs not to exceed the 5% maximum federal share payable by CNCS. And you don't have to, on the grantee share side, utilize all of the indirect cost rate. If your indirect cost rate is 31%, you could claim only 12% based on your agency requirements. And then the third method is the de minimis rate, and is for organizations that have never at any point in time held a federally negotiated indirect cost rate and who receive less than $35 million in direct federal funding. Organizations may indefinitely use the de minimis rate of 10% of modified total direct costs. And if this option is selected, it must be utilized consistently across all federal awards. The fourth and final section of the budget is your source of match funds, and all programs must complete a source of match funds chart. The amount entered must equal the budgeted total for local match as entered in sections 1, 2, and 3 of the budget. And the chart identifies the following: the match description, match amount, designation if the match is proposed or already secured, the match type, whether it's cash or in kind, and the match source, private, state, local, federal, or other. This section is also completed in eGrants. Okay, so we've covered a lot of information. I just want to pause again to see if there's any questions. There is a follow-up question on the NSCHC of what if the staff serve only in the summers and repeat each summer? Steve, if they are not employed by your agency other than just the summer, so there is a gap in their employment of more than that 120 days, then yes, you would need to rerun it. Any other questions right now? Okay. So we've talked about the different sections within the AmeriCorps budget, and now we will talk briefly about the 2 columns you will find within the AmeriCorps budget. For cost reimbursement budgets, there are 2 columns marked CNCS share and grantee share. And let's talk briefly about what these mean. The CNCS share is the amount of federal funds you are requesting from the Corporation for National and Community Service. The grantee share, or what we also call match funds, is the amount of matching funds, either cash or in kind, that you are providing. For the grantee share, CNCS has outlined what can be utilized as matching funds, and we will discuss that shortly. And so for each of the line items within the sections and subsections we just discussed, you need to determine how much you are requesting from CNCS and how much you will provide in match dollars or in-kind resources. There are no requirements about what line items or how much you put in the CNCS column versus the grantee share column, as long as you're not exceeding the maximum cost per MSY in the CNCS section. I know that was a question someone had earlier, all right, or a challenge, I should say. So as we just discussed, all cost reimbursement budgets are required to include grantee share or match funds. And CNCS requires that applicants of this budget type matches at a specific rate depending on how many years they've had an AmeriCorps program. The match percentage for a new program is 24% through year 3. And then beginning in year 4, the match increases annually until year 10, where it reaches a maximum of 50%. Under certain circumstances, programs may qualify to meet an alternative matching requirement that increases over the years to a maximum of 35% instead of 50%. And to qualify, programs must demonstrate that the proposed program is either located in a rural county in a severely economically distressed community as outlined in the application instructions. So match is calculated by taking the percentage of grantee funds compared to the total of CNCS share or federal funds and grantee share matching funds. So let's look at an example of a new program where 76% of the budget can be CNCS share and 24% can be grantee share. So this program is requesting 10 MSYs, and the maximum federal dollars you can request for 10 MSYs, again, per MSY, $15,192. So if we take 10 times 15,192, it equals 151,920. So that's the maximum federal dollars that they can request. And if you're requesting that maximum, to determine the required match, you take 151,920 divided by 0.76 to equal $199,895. Okay, that's your total grant budget. Then you take 199,895, your total grant budget, minus the CNCS share, 151,920, which equals 47,975. So at a minimum, at 24%, this program needs to include $47,975 in match. Okay. Now that we've discussed the match percentage requirements, the next question is what can be utilized as match. As previously stated, there are two kinds of match, cash and in-kind resources. For cash match, you can utilize contributions received by cash, check, electronic funds transfer, credit card, payroll, deduction, etc. Cash match can also be secured from donations, foundation grants, corporate contributions, leases, and sales of goods and services. You may use other federal funds as match on this grant, but you must have approval from that federal agency. It needs to be at the top, like the DC level federal, not the local federal approval. And you cannot use AmeriCorps funds as match on other grants. In-kind resources are defined as non-cash contributions provided by third parties. In-kind resources may be in the form of real property, equipment, supplies, and services. And to be allowable, the in-kind resource must directly benefit and be specifically identifiable to the program. In addition, you have to treat the CNCS share and grantee share the same in terms of documentation, allowability, and up to amount for like the living allowance and supplies, etc. If you are a newer program, your match percentage between year 1 and 3 is 24%. And I tell programs that have a low match, AmeriCorps program is expensive to run. But if you have a low match percentage, I suggest you have a program budget that your agency follows, a program budget, and then part of that program budget is your grant budget. You're not required by CNCS or any state commission that I've seen to literally put every single cost that you expect to incur for the program into the grant budget, unless it is required by your agency. So you don't have to list every single item to lower your match percentage. Usually what I suggest, especially to programs on the lower end of the match percentage scale. Okay. So let's look at the maximum cost per MSY, and this calculation is used to indicate the maximum amount of federal funds that can be requested for your program. And we've already kind of looked at this, but it's based on the number of MSYs you request. The total CNCS divided by the total MSYs. So the maximum amount of federal dollars you can request in your budget depends on the number and type of AmeriCorps members you're requesting, which should be guided by your program design and costs you need to operate the program. So here's an example in calculating the maximum cost per MSY. So let's say you request 10 MSYs for a cost reimbursement program, and you're a new program that could really benefit from the highest cost per MSY. Again, you would take 10 times 1,000 or $15,192 for a total of $151,920, which is the maximum amount of money you can request from CNCS federal funds to support the program. It's important to not confuse the maximum cost per MSY with the up to living allowance amount that is provided to the AmeriCorps members. They are very distinct items, but sometimes programs confuse these two items. The maximum cost per MSY is not related to the AmeriCorps member living allowance. Okay, so we're going to next talk about full-time fixed amount budgets and education award program budget, but there's a question that's come up and I may need some clarification on this question, Samuel. So the match percentage is the percent that the grantee will match, not CNCS. The match percentage is the amount of funds that the agency, it's either cash funds or in kind, that the agency will be putting into the program. CNCS does not fund every dollar that you need to run a strong AmeriCorps program. Was that your question, Samuel? Okay. If you need more information, Samuel, there we go. Okay. Takes longer to type than I think sometimes. So for instance, at 24%, the grantee will pay 24% and CNCS will pay up to 70%. Yes, so CNCS will pay up to 76% and your program would need to match at a minimum of 24%, and that's either cash or in kind. And that's only for years 1 to 3. So I'm just gonna back the PowerPoint up a second. So it increases every year that your program is funded. So years 1 to 3 is 24%, and it goes all the way up to 50% by year 10. All right, great questions y'all are asking. Okay, so we're just going to talk briefly about fixed amount budget. For programs applying for a full-time fixed amount grant, the budget is much more streamlined. Since fixed amount programs can only request a fixed amount of funding per MSY, they're not required to submit a detailed budget or complete the grantee share column. However, you must complete the source of match funds chart to identify the additional revenue sources needed to operate the program. And please remember that not all programs are eligible to apply for a full-time fixed amount grant. It must be a recompeting program or someone who was previously funded. So for fixed amount grants, in section 2 of the budget narrative, you would indicate the number of members requested to calculate the total number of MSYs. Then you would insert the amount of funding requested in section 2, CNCS share column, which should equal your total MSYs times the amount requested per MSY. So in this program, they're requesting 10 MSYs and they're only requesting $13,430 per MSY, for a total of $134,300 from CNCS. And then let's talk about education award program budget. This is very similar to the full-time fixed amount grant budget with a few additions. To complete the budget, programs here would identify the number of members they're requesting by category, so full-time, half-time, etc., and list under the column labeled without allowance. And then they would leave all other columns in the budget worksheet blank. The total number of member service years, or MSYs, will automatically calculate at the bottom of the member position chart, at which point the program inserts the amount of funding requested in section 2A, CNCS share column, which should equal the total MSYs by the amount requested per MSY. So this is the member position chart that you would complete to calculate the total number of MSYs. And this example illustrates a program that is requesting 10 MSYs. And as a reminder, for education award programs, programs may only request up to $800 per MSY. So the total amount requested would be $8,000, all listed under the CNCS share, and the grantee share would be left blank. Okay, so now that we reviewed the budget type, let's look at the financial reporting requirements. Let's first talk about cost reimbursement grants. After your program incurs the cost, you will submit a periodic expense report or payment request, some states call it different items, to your state commission. State commissions establish how frequently these reports can be submitted, such as monthly or quarterly, bi-monthly, and then reimbursement will occur for allowable costs, and programs must have documentation to support all of those costs. For full-time fixed amount grants, and Rebecca, this goes to your earlier question about budget type. For full-time fixed amount grants, the reimbursement is different in that it's based on member enrollment and retention. So I only encourage programs that have very high enrollment and very high retention to look into a full-time fixed amount budget. So here's an example of a program that has 20 full-time members at a cost per MSY of $13,000. So their total grant is $260,000. They have 17 members complete their term of service and 3 leave the program early. And the program would only be reimbursed as follows. So if we look, we skip down and we look at those 17 members that completed their service, you take 13,000 times 17, and they equal $221,000 that the program being reimbursed. And then if we go back up a little bit to each member, member A completed at 1,125 hours. And you divide that by 1,700 hours, which is the requirement for full-time members, which means they only completed 66% of their time. You take 66% times 13,000, which was your cost per MSY, and the program can only get reimbursed $8,560 for that individual. Same thing for member B. They completed 458 hours, which is 27% for a total of $3,510. And member C, 920 hours, which is 54% for a total of 7,020 hours. If you take those 3 members that left early, their total amount is $19,090. You add it to the 17 members who completed successfully, and had a total of $221,000, the total grant earned then is $240,090. So there's a difference of $19,910, which is not available to the program. Okay, so the program has lost almost $20,000 of their grant based on the retention of those 3 members. So it's important that programs that look at full-time fixed amount grants closely track member hours, because it's based on hours served, not living allowance paid out. So therefore, programs may experience a loss in expected funding if a member is not keeping up with hours. For example, if a program paid out 2/3 of a member's living allowance, but the member only served 1/3 of their hours, then the program will only be reimbursed based on the 1/3 hours served. For education award programs, the reimbursements are strictly based on member enrollment. For example, 20 members at $800 per MSY for a total grant of $16,000. Once the program enrolls all 20 members, they may request reimbursement in the amount of $16,000. The program will not be able to request reimbursement on any slots that have not been enrolled via eGrants. Okay. We next kind of want to wrap it up with program income. And program income is income including fees for service earned as a direct result of the grant-funded program activities during the grant period. The income must be retained by the recipient and used to finance the program's grantee share. So examples of program income can include, but are not limited to, income from fees charged to register participants for a conference or workshop. Income from the sale of commodities, data, and information records, services, or items fabricated or produced under a sponsored program, such as books, publications, software, childcare, tutoring, etc. Revenue received in return for providing AmeriCorps members services to a third-party entity, such as a school district, park management organization, etc. And rental or usage fees charged for use of supplies or equipment purchased with grant funds. So for example, if you or your partners place AmeriCorps members in schools and the schools provide $1,000 per member to the program in exchange for placing the members in the school, the revenue from the school is considered program income and needs to be utilized for the grantee share of the budget. In the event that the program has earned excess or program income in excess of the amount needed for the grantee share, then they have to follow the requirements of 2 CFR Part 200, and it must be deducted from the total claim cost. The earned excess income must also be noted in the comment box on the federal financial report. Programs cannot enter into a contract for or accept fees for services provided by members when the service benefits a for-profit entity, falls within a prohibited activity, or violates the non-duplication or non-displacement provision. All right. So we've given you a lot to think about, and now it's time for any final questions before I go over the resources that we'll share and some kind of wrap-up information. I also want to address a couple, since we have a few minutes, address some of the challenges that you all noted at the beginning of the webinar. So Teresa, you said one of your biggest challenges is accurately anticipating health insurance expenses. And what I used to do for a member, you have the option of budgeting for all of your members or budgeting for less than if you have full-time members or if you have full-time members and have to budget for healthcare, you do not have to budget for every single one. You could budget for a certain percentage of them based on the last 3 years of how many have taken health insurance. And just note that this is based on data from the last few years of how many members have taken health insurance. It is important to note, though, that if you accidentally underestimate, you are still responsible for covering those costs for the member. So it is a challenge. You also, if you overestimate, you do have the option of moving those costs out to a different line item, and you can talk about shifting those dollars to another line item with your state commission. Communication is a big thing, and so I had a great relationship with my CFO, so really just trying to get to know your fiscal staff and make sure everyone's on the same page, because that helps. So Christine, I know you said that you only get quarterly reports. I'm wondering if you could request at least reports maybe every month. And I'll talk a little bit more about this in program management, how I used to handle financials and reconciling them, just to make sure that things are processed correctly and that things aren't missing. So I'll give you some more tools on that next week. I think that was all the challenges listed at the beginning. There's a couple of questions that have popped up, so let me look. So based on the match percentages, from a funding perspective, grantees do need to pay more the longer they have a program. So the match requirements do go up the longer the program is there. Rebecca has a question on fixed amount budget. Does the reimbursement only happen at the end of the program year based on the number of hours completed, so the program has to have enough members? You know, Rebecca, I am not sure on that. I do not have that answer. I would ask your state commission. I'm assuming that there is certain points within the grant year, like the numbers should be at this percentage or that you should be able to request some reimbursement. But I would ask your commission about that. There's a question from Darlene about in-kind. Does it include fringe benefits and member support costs? So in-kind is not actual cash. So for staff fringe benefits, it could be in-kind if you have other sources to fund those staff fringe benefits. For member support costs, it's usually not in-kind, it's cash because you have to pay the members. So for instance, I had site supervisors that were staff in our agency that were listed in the personnel section of our budget, and a percentage of their time went to the AmeriCorps program, but their salaries were fully funded under other funding sources. So their percentage of time that they devoted to AmeriCorps was in kind, but it's much harder to get to. Member support costs are usually cash because that's FICA, workers' comp, things like that. They're not usually covered outside of the grant. All right, any other questions? Feel free to type away. So I just want to share the webinar resources that will be posted on Basecamp. We'll have a federal financial report and program income FAQs up there, a policies and procedures handbook sample. And then there's also on here a link to the CNCS self-paced online courses. And they have a variety of courses such as under the financial management section, financial monitoring, federal financial reports and program income, match requirements and documentation, and key concepts of financial and grants management. You also have access to this PowerPoint. It is listed, the notes portion of it is listed in the materials right now. It should be listed probably right above or below your chat box there. All right. So one final chat question for you all. What is one new item that you learned today? So just take a second to fill in the chat box of one new item that you learned today. That would be great. Thanks, Emily. How the budget for fixed program works. Great, Samuel, thank you. Match percentages and what side it applies. Carol, MSY is not related to living allowance. Yeah, that's a big one. I think people think those two are connected, but your cost per MSY, you may have only a portion of the living allowance on the CNCS side. Darlene learned more about the match. Sabrina is talking about the program year should be less than the budget year. Jessica, good budget design information. Well, I thank you all for joining us today and for sharing, and there's more coming in. So Mabel, as a first-year program manager, at least 75% of this is new to me. Great, glad to pass it on. Eve said every year the match percentage goes up. Yep, that's a good learning point, and learned what MSY is. Great. So thank you again for attending and sharing just now, and we hope you can join us for our last webinar in this series, in this 10-part series, next Monday, April 29th, on program management. It'll kind of encompass everything, and we hope to leave you with a lot of tools and tips in looking at the program year as a whole. After the webinar, you'll receive communication about the recording and resources and a link to the evaluation. Again, that evaluation is really helpful to Amy and I in looking at these and kind of how we may want to revamp them or add to them. So please complete that evaluation. And then as a reminder, if you haven't already registered, we really, really encourage you to register for the National Service Training Conferences. Central, I'm not sure if the Central registration is still open, and Ask is not on today with us, but check out nationalservicetraining.org. And if you can't attend the one that your region is allocated to, you can certainly attend one of the others, but they're a lot of fun, a lot of great learning. Amy and I will have a table in the exhibition area, so please stop by and introduce yourself. We'd love to meet all of you. All right, I'll stay on the line for a couple more minutes, and Emily says that the Pacific Southwest, the one in Idaho, towards the end of May, the registration closes today. So if you haven't registered, please do so. Great, thank you all. So, and there's a question that's come up that's not clear the difference between the program year and budget. I think you all can still hear me. So I will go through that really quickly. Let's go back to that one. Find that slide. Sorry if I'm making y'all dizzy. So the budget year is the 12 months that you have your grant for. So if your grant starts on September 1st and goes to August 31st, that is your budget year. Your program year is a portion of that, okay? And your program year is the time that your AmeriCorps members serve within that budget year. Your members cannot serve beyond that budget year with a little bit of variance within that. But you should design your program for your members' service to fit within that 12-month budget period. So your members may serve 3 months if they're minimum time members. They may serve 10 or 11 months if they're full-time members. If they're full-time members, they can also serve 12 months, but we encourage you to have them serve less than 12 months so that in the event that they have to extend their service, they can to finish their hours. It also gives you time to close out the current core before bringing in a new core. So that's the difference kind of between the budget year and program year. And there's another question. All costs under the members and herself should be under CNCS share. No, not necessarily, Darlene. You can decide any line item could be under CNCS or grantee share, but anything under grantee share either has to be in kind or cash. So if your salary does not have another source, you could put it all under CNCS. That may not work depending upon your cost, reaching the maximum cost per MSY, or you could put a portion under CNCS and a portion under grantee. But if the agency does not have another source of funding covering that portion of your salary, they will need to raise those dollars, in other words. I hope that makes sense, Darlene. Okay, great. All right, I'll stay on for another minute or so to see if there's any further questions. Otherwise, have a great rest of your week.